Last week, I posted a video saying that I had a few stocks in my portfolio that were overvalued according to me, but I wasn't selling them because I believe that it would be better to own those stocks instead of holding cash. But guess what? What I did in the last few days? I sold many of these companies. I'm not in cash. I have invested in a few other companies. Today we are going to talk about why I sold these stocks in particular and why I did not sell all of them. There's only one of them that I sold everything. By the way, did you see the rainbow? Okay. Let's talk about the one that I sold completely. That's AutoZone. It's a wonderful company, one of the best, most efficient companies in the world. This company constantly buys back shares. But today at the price at which the shares are, I won't say that they are undervalued. They are overvalued. So in other words, when the company is buying back shares, they are not really being that generous to shareholders as you may think. If the shares were undervalued like I believe it was last year, probably then it would have been good to keep buying back shares. This is an issue also happening with Apple. They are buying back so many shares, but the shares are expensive. So even though the share count is going down, it is not helping the shareholders that much. What the company should have done right now is pay a dividend. There are always these two possibilities in terms of capital allocation. Of course, you can also repay your debt. So you have these three options in front of you. Let's forget about the debt. Let's talk about returning cash directly to shareholders. You have buybacks and you have dividends. A good company should know how to allocate capital based on how much the stock price is worth on the stock exchange. And I believe that Booking Holdings is doing that very well. Recently, they have started paying in dividends. Before, it was just buybacks. I won't say that the stocks are expensive today. They are undervalued, but not that undervalued for me to buy more shares of Booking Holdings. Nevertheless, it's good to see that they are both paying in dividends and buying back shares. So they can adjust. If the stock price goes up, they can pay more in dividends compared to buying back shares. In the case of AutoZone, it was such a small portion of my portfolio, I believe a little over 1%, it did not make much sense for me to keep holding. Because let's say the stock price doubles in 5 years. From 1% it becomes 2%. Assuming everything else remains the same. It would be better for me to use that 1% and invest it somewhere else where maybe I can get 1.5%. If it was a big position, maybe then I would not sell that rapidly. But it's such a small position, it's not going to bring that much profits to me over the long term. It's better to sell. And I like the company, but unfortunately, my money, my cash is better invested somewhere else. I reduced my position on Apple for one of the same reasons. The company is overvalued. But Apple used to be a bigger position to my portfolio. So I did not sell everything. I'm still holding some Apple. But gradually, I believe I will take more and more profits on Apple. And with Apple, capital allocation also matters a lot. And that's why I believe Warren Buffett is selling shares of Apple. It's not really about the company, but they have so much cash and they are not really allocating their capital that well. Buying back shares right now for Apple is not a good idea in my opinion. One stock that I said was the most overvalued in my portfolio was JP Morgan Chase, and I took some profits on JP Morgan Chase. It's a wonderful company. Every of the companies I'm going to talk about are wonderful companies. I would love to own them forever. I think I never saw shares of JP Morgan Chase before, but I had to. It's getting overvalued. It's a bag. It's trading at over 2 times book value. Yes, there is a premium for JP Morgan Chase for being such a great bag, but it's not worth it to stay invested in such a company when you have better options. I will tell you about the options in a few minutes. Let's talk about the next one, and I think it's the most important of the stocks I sold. It's Meta. I never sold Meta since I have been investing in the company since 2022. And I always say I wished I bought more of Meta. Earlier this year, Meta was the largest position in my portfolio. Now it's number 4. It's not because I sold, it's because I bought other companies. Meta is overvalued, but not that much for me to rush and sell everything. And there is something else about Meta compared to JP Morgan Chase, compared to Apple, compared to AutoZone, and even Essent Group that I sold. Meta is still growing and it requires little capital to grow. So even though the intrinsic value that I gave to Meta today, the stock price might be higher than the intrinsic value, the fact that the intrinsic value is growing every year and it requires little capital for this intrinsic value to grow, makes Meta a better investment compared to the other ones. It's not just about the intrinsic value, it's how much this intrinsic value is going to grow over time. And Meta is a wonderful company, requires little capital to grow. So my money is working with Meta. I only lowered my position by about 0.5%. I don't think I'm going to lower it that much. Maybe one more time early next year I will reduce a little more. It depends where the stock price goes to. But I don't want to sell Meta. Also, I don't want to be in such a position that I don't sell Meta at all. I keep holding on it. So that's why I decided, okay, let me start selling. If I start selling, then gradually I will know that I have to sell more. But not right now. That's for Meta. Let's talk about Essent Group. Why I want to make the comparison between Meta and Essent Group is because Essent Group, according to me, is undervalued. I told you last week that the intrinsic value I saw of the company, I had to lower it. It's not that undervalued anymore. It's because of the title business and also because of macro conditions. So I was a little too optimistic about mortgage insurance, about the industry in general. That's why I had two companies in my portfolio, Denver Financial and Essent Group. But now when I'm looking at this industry, the cyclical nature and everything, I'm less optimistic. And I would rather my cash, even though the company is undervalued, it is, let's say, returning me 15%, 18% a year on equity. I would rather invest in a company that is returning me 30% on equity. My money is working in this company, but in other companies, it's working more. So it is as if you have a box, you have different boxes, you're putting your money to work. Those boxes are working your money, growing your money. So yes, you were able to buy this particular box at a price that it is undervalued at a really good price, but it's not really working that much as other possibilities. So you are always looking at different possibilities. It's not just one investment you have to look at different investments. And the three stocks today that are above Meta in my portfolio are Crocs, La Française des Jeux, FDJ, and Wise. The one that I'm buying the most right now is Crocs. I believe it is the most undervalued stock in my portfolio. Wise and La Française des Jeux are also undervalued. But 1 month ago, they were more undervalued. Now it's not that much. But that doesn't mean that I stopped buying. It's not because a company, let's say, was undervalued by 30% a few months ago. Now it's undervalued by 25%. That it's not a good investment anymore. It is still a good investment. Wise and FDJ are still great investments for different reasons. Both companies require little capital to operate, to grow, but Wise is growing while FDJ, it is returning everything to shareholders. So I would rather own Wise over the long term compared to FDJ. Although the FDJ dividends are great to have. And of course, I will use that cash to buy other companies. There are other undervalued companies in my portfolio. Most of them are undervalued. Booking Holdings, Lululemon, but there is no margin of safety. And it's important, whenever you are making an investment, to take a margin of safety. With Crocs, with Wise, with FDJ, the margin of safety is here. I will keep buying those stocks, even though they are a large portion of my portfolio right now. I believe in them, so why not buy more of the stock that is undervalued? Great company, great management, in which I believe in, instead of owning other, less successful companies. Selling is always harder than buying. I always tell you that. I will recommend you watch this video next, where I talk about all the stock I have right now in my portfolio. Have a nice day and goodbye.